Good morning and welcome to the latest edition of What's Up Monday for the oil markets. Today is April 9th. It's about 7:30 a.m. in the morning Eastern Standard Time. And this is Dominic Chirichella, and I'm happy to be with you for another discussion on what's going on in the oil space. As usual, you can contact me with any questions. You can email me at my email address at dchirichella at EMI.org, or you can go to our website at www.emi.org to subscribe, or you can find a place to send questions also. And again, I hope to hear from you, and I hope you enjoy the latest edition of What's Up Monday. So with that, let's get started and see where we are at the moment. So where are we this morning? We see oil prices are a little bit higher. The Brent WTI spread is continuing to widen. It's back over $5 a barrel. Cushing inventories are building, even though total U.S. inventories of crude oil are declining. And certainly with the tensions emanating from the Middle East, it's giving Brent a little bit more of a bump than WTI. I like being slightly long the Brent WTI spread. I think it still has potential to widen. It may go back to the highs we saw early on last year, where we hit around $6 plus per barrel. Refined products are also higher this morning, and pretty much following the crude oil market, again being driven by higher Dow futures, a suggested higher opening, and that's keeping the oil prices a little bit higher. For those following natural gas is starting out the week lower. It was lower last week for the week. Although it's been colder than normal, it is spring. The colder than normal weather is not catastrophic, and it's not going to result in significant heating related demand. And within the next couple of weeks, we should start seeing more seasonable spring like weather. On the crude oil chart, we could see we've been in this medium term uptrend. The market has dropped below the lower support channel of the linear regression trading channel, and it's kind of been a cyclical trading pattern. We're down at the bottom of the cycle. We'll see if the market is able to generate enough buying interest today to push us back inside the trading channel. I don't think it's going to be driven by fundamentals today. I think it's going to be more driven, if we do get a recovery, I think it's going to be more driven by a recovery on the financial side. Technically, we're showing the moving average convergence, divergence, showing a downward sloping movement, or somewhat of a short position seems to be in favor based on the technicals. Again, I would caution anyone in trading these markets right now. They're jumpy, they're uncertain, and they're moving based on what is being said or what's being talked about as far as trade tariffs and inflation risk. We look at the spot contract for the Brent is June, so I put the June WTI contract alongside of it. Again, you can see the June contract for WTI is trading much like the May, and it's slightly below the support area for the linear regression line, whereas the Brent contract is holding support right now, and that's kind of been reflective in the way the Brent WTI spread has been trading. So right now, Brent is less responsive to the downside, and it's been holding the spread quite nicely at the moment.